Alright, hello guys, so I'm just gonna do a video of what I'm thinking right now, just on the market and also on the gold. So first of all, we're gonna have a look at the market and where we're standing right now. So as you can see here, I put a chart together on the monthly time frame, so each bar is 1 month. And what we can see is that first of all we rejected from this trend line like I was expecting. I didn't short here, it just went down too fast and too hard, and I don't really like shorting because shorting is much more tricky than going long. So anyway, and I put here reasons to bounce here, right? There are some reasons to bounce here. First of all, trillions are being printed right now, and we haven't seen this much printing of money since GFC. So if you have a look on the Federal Reserve repo operations chart, you can see they have started the repos when the banks started to struggle. I believe this is because of structural problems and very deep problems within the banks, because basically what repos are basically banks borrowing money to other banks, and if banks do not want to borrow to other banks, that means they do not want to accept their collateral from other banks. That means banks think that other banks are insolvent and broken and they will not be able to repay them, so they refuse to lend money, and therefore the Fed has to step in and print these repos, right? So we could see that they've been printing, not QE they were calling it, and now basically because of this massive crash that we've had last few weeks, we printed 1.1 trillion or like 1.5 trillion US dollars, which is huge, right? Which hasn't been seen since the global financial crisis back between 2008 and 2015. Fed's balance sheet ballooned from 9 billion to 4.5 trillion, so also in order of trillions. So basically we are back in the territory, we're back into massive money printing territory in order to sustain the market, sustain the liquidity. So this is the first reason. Right? Last time it did work, and it ended the crisis in 2009. Over here at the bottom, they introduced the massive QE to bail out lots of banks as well, and we've been heading up since then. So now we're dropping, and from the top to the bottom on the futures, this is CME futures, we dropped 30%. So 30% is huge. Basically, you don't see 30% drop since we had the 2008, 2007-9 crisis, the great GFC. So the second reason we could bounce here is from TA point of view, there is a trend line from 2009. So this white trend line, usually I like to draw trend lines with bodies, but trend lines are very subjective. So here I have quite a few touches, and now we're trying to hold it. We dipped below it, as you can see, and now we're trying to go back up and close. It will be very, very key on the monthly to close above this trend line. Or somewhere in vicinity at least, because this trend line is a little bit subjective, so you could draw it a little bit lower, a little bit higher, depends how you draw it, right? But it's just what we see now, so we want to close above it. The other thing that we see here is that we have the horizontal support, which is we had this low here back in 2018, and we bounced just above it as well. So that's acting as a support. So you got one support, two supports, and then number 3 support is the Fibonacci retracement, right? Fibonacci retracement. So if we draw a fibs from bottom of 2009 to the top, we are bouncing exactly from 0382, which is a very key level in the Fibonacci sequence, and it actually works very well with markets and with trading. So because this is based on human nature, and human nature is based on Fibonacci. So those are the reasons we can bounce. And we're going to have to look what this bounce is going to look like. Is it going to be a weak bounce, and then we just come in and come back and retest this trend line, and then if we muck around this trend line for a while, and then we have much higher chance of breaking it. Or if we have a V-shaped recovery and we just rocket ship upwards, breaking back the EMAs and turning them into support, then there is a much higher chance that we keep heading upwards. So right now we don't know what's going to happen. So if you are trading SP500, for example, SPY futures, what you want to see is, at the least, you want to see, if you want to go long, you want to see at least a daily uptrend. So you want to see this bounce to play out further. You want to set a lower high somewhere. Then you want to make sure that you hold this low here. You definitely do not want to break this 2,380 level, because it basically reinforces that bears are in full control if we keep heading down. Bulls need to win at least something. We have been downtrending since the top here, very, very violent downtrending. There's other things that you can look at. Maybe you can say, oh, we're going to have a bullish divergence, but you can always find things in the technical analysis. So those are the main things. So the main things for me is on the bigger time frames. We also oversold on the RSI here, but it's because of the coronavirus. It's unprecedented. It's never been seen before, something like this. So yeah, very interesting. The other thing I wanted to have a talk to you about is another interesting thing, I guess, is that technical analysis works really, really well. Look at this perfect double top here from 2000 and from 2007, when we had a macro level double top. TA just told you perfectly where you want to go short and sell your stuff. And once again here, TA told you perfectly where to get out, because this trend line is very, very important. We haven't broken above it since 2011, and it's always been a resistance. So next thing I want to talk about is gold, right? We want to look at gold, and gold is, everybody thinks that gold is a safe haven asset, and it's gonna be, everyone's gonna go into the gold right now, because nobody trusts the the financial system. Where do you put your money in? Basically, the stocks are dumping, everything is dumping. Where do you put your money? Everybody is questioning that. But one way of looking at it is that during a financial crisis, like a global financial crisis, people are basically do not have enough money. So you have to, let's say you're a big corporation, you're moving big money. First of all, you need to pay back on your loans. Actually, I wrote down some of the stuff here that I wanted to say about the dollar. So basically, first of all, everybody wants to exit into dollars, and they dump even gold. And the reason they dump everything is because everyone has a huge US dollar debt, and the debt needs to be serviced. They need to repay the debt, the interest on the loans, in US dollars. And when the crisis happens, everybody becomes short of dollars. They're not making money from the businesses because businesses are in crisis. So everybody becomes short on US dollars. Everybody wants dollars, so they will sell everything. The other thing is that because all trade is getting shut down right now because of the coronavirus, so it's harder to obtain US dollars. Also, the oil price has been there's been oil price war, and we had oil price go down a lot in the markets. Therefore, countries like Saudi Arabia, Russia, and other oil-producing companies sell their oil for less US dollars. Therefore, they have less US dollars in the system to repay their own debt, and also that there is less US dollars, coming in the circulation because of this. And also there is a fear obviously in the market. Everybody is dumping the stocks and other investments and go back into US dollar, and everyone will be selling assets to be able to afford business expenses, food, everyday expenses. And this will basically cause the dollar to go up. And you can see here, this is the chart of dollar DXY Dixie. It's I think it's measured against other currencies in the world, like other important currencies like euro, pound, probably French stuff. So basically we've been this is on the monthly as well. So basically we tried to break out of this long time triangle as well. We got rejected and started to go lower, but this crisis started happening, and then we made this huge wick to the downside, showing that now everybody's buying up the dollar. So now we have and we are once again above this 21 EMA, which we haven't broken since August 2018, or even earlier than that. We've been closing since May 2018 above it. So it's key to stay above it, and maybe the US dollar will break out. There is some bearish diversity, but anyway, I'm talking more about macro sort of level stuff. Excuse me. So in mind of all that, because dollar will be going up, and the other thing we can look at, I actually did have a look at the history. Like, so for example, we look at the 2000 crisis. I'm not sure if you can see this really well. I don't know how to make this bigger. But basically what I've done is I compared SP500 and gold during the last financial crisis. So basically this is the crisis in 2000. This is here crisis in 2007 and ending in 2009. So basically the interesting thing here is that, right, well, back in 2000 the price of gold was really low, right? And what I wrote here, I'm not sure if you can see it, but I'll read it. Number one, during the S&P, during the 2000 S&P 500 bubble and crash, gold bottomed out. So during this time here, when S&P 500 was dumping, gold actually found its bottom and started uptrending. But then, while stocks were crashing from 2000 until 2002, gold gained about 17% in that crash in 2000. But if we look from 2003 until 2007, both have run up. Both are running up, right? Until 2007, you can see the horizontal lines, vertical lines I put here. You can see that S&P 500 topped out before gold. So gold kept going up until in 2007 the S&P 500 started to crash, and gold kept going up until 2008, and then also had a 25% pullback over here, 30% pullback even, 33% pullback. So gold had 33% pullback until November 2008, and S&P 500 had about 50% pullback, like 60% pullback almost, right? So so what's interesting here is that in the last financial crisis, gold actually went down quite a large amount. 30% is pretty big in terms, if you can, you don't want to lose 30% of your money. So after pullback, after the 30% pullback in 2008, gold continued to all-time high in 2011. Which is here, which is over here. Gold went to a bull run in 2011. and then had a crash. After that it went sideways and then had a crash, and then it had a crash up to 1000, which was 45%, right? 45%. So, but S&P 500 had a pullback in 2011 while gold went sideways, and S&P 500 had a pullback as well, but then it continued to go to all-time high in the longest bull market in history, fueled by low interest rates and never-ending QE, basically, right? So every time there was something, they said, oh, we're printing more money, oh, we're printing more money. So now we are here, we're dumping after the longest bull market in history. But the thing that I wanted to take note of here is that in the last financial crisis, which was the liquidity crisis, and it was the bad loans in the US crisis for the houses, subprime mortgages, we had gold pull back 30% as well. So from this point of view, what I'm thinking is that gold does not have to go up. While we're having this crisis, gold does not have to go up. And right now, if we're looking on the monthly chart of gold, what do we see? You know, what do we see? The thing that's the thing that worries me is these two large wicks forming right now on gold. Right, there's two large wicks, and those two large wicks on the monthly. This monthly is not through yet. Today is the 13th of March, Friday the 13th. All right, interesting. Very interesting, Friday the 13th. So there's 2 weeks showing the rejection here, and also on the RSI you got a signal that maybe we're gonna have a bearish divergence. If we close anywhere, if we close red here, it's gonna just look really, really bad. If these two candles close just like this, it's massive rejection on the monthly. The positive, and if we look on the weekly, we have a. So I'm just gonna mention a couple of things that we are going down. So there is a bearish divergence here as well on the weekly, and but we have pulled back. We have pulled back. So now I'm gonna have a look at the other signal like this one here. So this one here is pretty key. So this trend line here is basically it acted as resistance back in 2011, then it acted as support, and we broke it in 2013, and we've been always under it. So now we came back up, it acted as resistance again, we broke through it, and now we're wicking there, and we're holding this support here. So my idea would be, as long as we're holding above this support, we are bullish, because this is a key level. This is a multi-year support and resistance trend support now. And also it's very, very useful that it actually lines up together with this weekly 21 EMA, which is this purple line. Excuse me. So as long as we're holding, and if you remember in my last video, I was saying that as long as we're above the weekly 21 EMA, we're closing on or above weekly 21 EMA, and we are closing above 50 RSI, because I looked at it historically, and every time we're above it, we are in a bull market. As long as we're holding above the 50 RSI and 21 EMA, I'm in the trade. So if we do drop down a little bit lower, I may enter and put a stop loss level just below this low here, which is 1,551, and then I will stop out. And yeah, so that's basically my plan. It's pretty simple. As long as we're above weekly 21 EMA, as long as we're above this closing above this trend line here from the multi-year, we have clear skies up above us. The thing is that right now I did exit my gold position somewhere up in here because of my previous analysis, which is this analysis here, that when we had the last crisis, gold dropped 30%. So basically, and also because we're having not very clear signals, because we have bearish signals on high time frames, really large time frames here. So what I want to see is I want to make sure that this trend line holds. So we held it here. We held it once again here. We're bouncing. We're forming a nice daily candle. But what I want to see is daily uptrend. And if we have a daily lower high, and then we come back, and let's say we do something like this, and then when we start going up here, can enter and put a stop below it. That means we are trending up on the daily. Then we are trending up on the daily, and therefore that means on the weekly we will be we would have ended our consolidation on the weekly, and we would just keep going higher, and that's probably a simple play. But my ultimate stop, let's say the other thing that could happen, the other setup that I would take is if we go up and we drop here once again, and then we start bouncing, you just enter here, you enter above this trend line, and then you put a stop there. So then you have an even lower risk. You have your risk only about less than 1% if you enter there, and that way if you do break it, you just get out, easy and simple. There is not a very, very easy decision. So that's how I would play gold. But right now I have exited my gold position because of this coronavirus, this unknown thing that nobody knows how bad it's gonna end, how bad it's gonna get. It's already gotten pretty bad, and I've listened to a couple of experts talking about the coronavirus, and they are they're not saying, oh, it's just a flu, it's just a flu. This is worse than the flu. So and we are very, very much not prepared globally to things like that. You want to buy something from Alibaba, you want to buy something from China, it's not going to get delivered to you right now. I've tried buying stuff, it's just not bad. But at the same time, we are printing trillions of dollars right now. We are printing trillions of dollars to help the market stay up. So if we are printing trillions of dollars, we could go back up. It just depends on if Federal Reserve has lost control or not. Federal Reserve has lost control, and we get into a bear market, and we get into the recession or even depression, and experience something like back in 1937. We are in huge trouble. We're in huge trouble, and we will, everybody will suffer, and we will lose a lot of wealth, and so we don't want that. But if the Fed has lost control and the printing of money will not help, then there's nothing you can do, and then there is a chance that there could be a hyperinflation if all the governments in the world will continue printing money, continue putting money in to the system. There is a chance of hyperinflation, just like what happened to Germany, because that's what they've done back in Weimar Republic in 1920s or 30s. They printed themselves into hyperinflation. So yeah, very, very, very scary stuff. So and you can see Australian dollar is just getting obliterated. On the monthly time frame. On the monthly time frame, we're about to, if we get to 0.6 American dollars, we will be 2008 lows, and then the next low is back in 2003. So if you have your money in Australian dollars, it's been just really, really bad since 2011. Since 2011, you've lost 43%. 43% against American dollar. Oh my god, that's why the house prices keep going up. And you lost 23% just from 2018 against American dollar. This is insane. This, the currency is supposed to be stable. This is not stable. You do not lose 28%, 23% just in 2 years or whatever. January 2018 and now it's February, March 2020. So 2 years. So yeah, and I mean it's fueled by coronavirus, and it's obviously fueled by this the oil wars right now. What they have with Russia, Saudi Arabia, and America. So basically, I'm not sure if you know what the oil war is about, but in my opinion, it's basically about that. Russia decided not to help Americans establish their oil business. So basically what happens is that Americans have established this fracking or oil extraction business. They want to become oil independent from Saudi Arabia and from Middle East and from Russia, and they have introduced a bunch of companies mining oil, and so all this oil flooded the market. The oil prices started to drop, and now the Russia basically said, well, you know what, we can hurt America, we can probably make a good business decision for our country to put America out of oil business, because their companies have very, very large debt, and they are not as profitable at mining oil as Russia and Saudi Arabia. They will go out of business if the price of oil stays low, because and Russia said, yep, we just, OPEC wanted to say, hey, let's slow down the oil production and make the price go up, because the oil production, you slow the oil production, you increase the demand. You have the demand the same, but you decrease the supply, so the price should go up. But Russia said, nope, we're not doing that. And then Saudi Arabia said, well, we're going to increase our production as well to smash use. And basically the oil price just nosedived as well, and this tanked the market at the same time as coronavirus. So yeah, basically that's my understanding of the system. Right now I'm all in US dollars, pretty much. I do have cryptos, and cryptos are just obliterated, which is really, really bad. But I pulled out right now out of gold and out of stock market. But I never really was in stock market anyway, because I have been expecting this huge dump. Just due to the longest bull market in history. So yeah, you heard my opinion. We need to at least start uptrending for me to even think about entering, because right now we're having this bounce, this oversold bounce, due to possibly injection of the $1.5 trillion. We have to see how good this bounce is going to be. When the market opens today at my time, it's going to be 9:30 p.m. or it's going to be like 9:30 New York time in the morning. When the market opens, we're going to have to see what the real volume does. Do we see the bounce, how high this bounce is going to go, and then if it's just going to fade, and we're going to fade back down, that's would be a very, very bad sign. And basically we will be in recession. We're 30% down already. You don't want to go lower than that. So anyway, but for long-term portfolio, you could have something like right now 70% US dollars and 30% gold, and maybe like 5% silver or something like that. We didn't look at silver, but silver is dumping, right? Silver is also dumped hugely. So if you look on the weekly chart, oh my god, like I was expecting silver to go up, but as soon as it goes, if it breaks what you think it's gonna do, you get out. You get out of the trade. You don't stay married to your trades if you want to be a trader, investor, or whatever. So I'm out of silver as well. So yeah, I'm just gonna sit and wait. I'm gonna sit and wait for the uptrend. But if you want to be not as proactive as me, because what I am doing, I'm looking at the charts every day, and there's more information coming at me every day. So I can make decision daily. If you are not able to do that, safe way could be just to hold US dollars and then a little bit of gold, and then maybe change your weightings as we go forward in time and we get more information on what the market is doing. If we start uptrending on the gold on the daily, you can enter more gold, and then as long as we're keeping the daily uptrend, then you can stay in the trade. And then if we start getting a weekly uptrend on the gold, then you can put your stop under the weekly high or low, and that will and then the weekly 21 EMA. Those are the things, and the other thing is you can also put it in as a trade, right? You just buy gold as long as we're holding above the weekly 21 EMA, and as long as we are holding above this multi-year resistance and support trend line, with your stop over here, then it's not a bad trade, right? It's not a bad trade. So anyway, let's wrap this up. Thank you very much, and hopefully everything will be fine.